Natural gas prices are susceptible to the most extreme swings as a direct result of imbalances between supply and demand for it. Today, natural gas prices are down 75% from their highs in 2022 as a result of a massive oversupply and a lack of demand to meet that supply. But as we're going to discuss in this video, a lot of things are changing very quickly in the natural gas market. And we're going to try to find out if these things can finally get natural gas prices out of their vicious downtrend. Let's start by looking at the supply side of natural gas. U.S. production peaked in early 2024 and has been on a relative decline. Now, it may not look like much on this chart, and it's probably premature to conclude that this very recent trend is going to continue. But this is already a substantially different dynamic to anything we've seen throughout 2022 and 2023. The last time U.S. natural gas production remained steady like today was in 2021, 2017, and the early 2000s. And if we look at natural gas prices during these periods, it saw massive price appreciations, with natural gas moving up by over 400% in 2021, 180% in 2017, and 700% in the early 2000s. So should traders be preparing for a major supply squeeze again just because the U.S. is turning off their taps? It is true that the U.S. is by far the world's largest natural gas producer, and they're also the only natural gas producer that has actually been ramping up their production over the last decade. So if the U.S. is now starting to turn the taps off, traders should watch out. But natural gas supply is just one side of the story. In order for the price of natural gas to rise, we need to see demand outweigh supply. And while it seems that the U.S. has stopped ramping up their production, they've also seen their consumption of it begin to level off. So not really the type of thing you see when you're experiencing a shortage. In fact, we have evidence that suggests the U.S. currently has a high level of natural gas shortage. This gray area shows us where natural gas storage levels are typically at for each period of the year. And this blue line shows where natural gas storage levels are this year. Throughout the entirety of 2024, they've been on the higher end of the range, so that isn't exactly reflecting a shortage of natural gas. If we take a look at demand from Europe, the picture isn't much better. Europe's consumption hasn't really moved higher in decades, and their natural gas storage levels look quite elevated as well. Just for comparison, this is what storage levels looked like in 2021, right before the price of natural gas jumped by over 300%. So if US and European consumption is leveling off along with production, it's hard to imagine that a big supply-demand imbalance would occur and trigger a large move up in natural gas prices. So that is the bearish case for natural gas, that two of the largest global consumers of natural gas don't really look poised to increase consumption. This explains the downtrends we've seen on the price of natural gas. More of the same dwindling down of global gas consumption would just lead the price of natural gas lower, even if production is leveling off. So is all hope lost for natural gas? Or is there something that could maybe catalyze some kind of demand, which would squeeze that declining production? That is where China could potentially come in. Believe it or not, the US and Europe aren't the only consumers of natural gas. Yes, they've definitely been the biggest players over the last few decades, which is why traditionally natural gas traders mainly look at the consumption from Europe and the US. But as you can see, China has become a massive consumer of natural gas in a very short amount of time. They've truly witnessed a meteoric rise in consumption. In 2022, they almost used up as much natural gas as all European nations combined. Now, the question is whether China's consumption is poised to continue skyrocketing higher and whether that could trigger a squeeze of global natural gas supply. While throughout most of recent history, the answer would have been no, simply because China hasn't been connected to the same natural gas market as the US and Europe. Natural gas transportation has largely depended on pipelines that could only move gas within nearby regions. For example, the gas market in Europe could not link directly with Asia or North America because there was no pipelines that stretched that far. That is until liquefied natural gas, LNG for short. This cools the natural gas into liquid form, which can then be shipped across oceans in special tankers. Once it arrives at its destination, the LNG is turned back into gas and sent through local pipelines. This process lets gas flow between continents, making it possible for gas from the US to reach Asia or Europe. Now gas can be bought and sold between different regions, making the market truly global. So this means the global gas market is now connected thanks to LNG, liquefied natural gas. LNG has existed for decades, but its use has only become more widespread recently as the cost for producing it has come down. So theoretically today, a big boom in China's economy could trigger a supply squeeze of the natural gas market. We saw this happen with oil in the early 2000s, where China's economic growth had a massive impact on oil. This is the chart of oil in the early 2000s. Oil prices went from $10 a barrel all the way to $144 a barrel, an absolutely spectacular bull market. And when we overlay the Chinese stock market on top of it, we see the huge correlation between the two. A big part of the rise in oil prices back here were driven by optimism around the massive Chinese economic growth in the early 2000s. Of course, it all came to an end during the Great Financial Crisis in 2008, but oil traders that were betting on China's impact on the oil market likely proved extremely successful during this bull market in oil. Given that China is now connected to the global natural gas market thanks to LNG, it could very well be that a Chinese economic boom could fuel higher prices without necessarily seeing a lot of demand from the US and Europe. This is China's economic growth over time, and while it was extremely impressive in the late 1990s and early 2000s, in more recent years, we've seen a considerable slowdown in China's growth. So China hasn't really been able to show the natural gas market what it can do yet. If growth over there does pick back up, however, things could change very quickly for the natural gas market. And according to the Chinese stock market, we could be starting to see a shift taking place in China's economy. Over the last 30 years, the Chinese stock market has been a relatively good reflection of where economic growth stands. We recently posted a video diving into the subject. We'll see if this recent jump in stocks can transform into a more durable recovery. If it does, China could end up being a major upwards driver for natural gas prices, just like it was for oil in the early 2000s.